Good evening, traders, and welcome to BCR's Evening Market Outlook, where we're bringing you the latest market developments that shaped sentiment over the weekend and into this week. From shifting tariff policies to soft economic data, let's break down what's moving the markets. Starting with trade, the US confirmed that the next round of tariffs is locked in with no adjustments expected during the ongoing negotiations. Canada is still pushing for a deal, while Switzerland appears more flexible, offering concessions that could cut tariffs by nearly 40%. President Trump has delayed reciprocal tariffs by a week, now set to take effect on the 7th of August. Turning to the US economy, July's non-farm payrolls disappointed, adding just 73,000 jobs, which was far below expectations, and previous months were revised sharply downwards. This weak data led traders to fully price into 2 Fed rate cuts by year end. The ISM manufacturing PMI also dipped to its lowest level since late 2024, though consumer sentiment still remains strong. President Trump also responded fearlessly, accusing the Bureau of Labor Statistics for manipulating data and ordering the dismissal of its chief. At the same time, tensions with Russia escalated, with Trump deploying 2 nuclear submarines to the region. He also lashed out at Fed Chair Powell, but backed away from firing him for now. Within the Fed, sentiment is starting to shift. New York Fed President John Williams noted that large revisions to jobs data, hinting at possible September rate cut. Other officials like Walter and Bauman are now vocal about the need for action, though some like Bostic still caution against moving too quickly. In the gold market, prices rebounded sharply from last week's lows, pushing back above 3345. A bullish hammer on the weekly chart suggests that momentum may now favor the bulls, with key levels to watch between 3438 and 3268. Meanwhile, in forex markets, weak jobs data has intensified pressure on the Fed. The euro rebounded to 1.16 against the dollar, though broader trend remains bearish. Markets are now pricing in a nearly full 25 basis cut point by September. Oil prices also saw a strong week, climbing over 3% on renewed geopolitical risks and hopes for progress in trade talks. Trump's warning of secondary sanctions on Russia's oil has raised concerns about supply disruptions, boosting crude's risk premium. As long as WTI holds above 64.40, the bias remains tilted to the upside. That's all for this evening market outlook, with markets bracing for the Fed's next move and geopolitical tensions on the rise. Expect continued volatility across oil, gold, and in the major currency pairs. As always, stay sharp, we'll manage your risk, and we'll see you in the next update.